Hello everyone, this is Dave with Dave's Market Explorer. Thanks for joining me on this Saturday, June 6th. This week delivered a long overdue reality check with a sharp sell-off, so let's break it down with fresh data, our timing framework, and balanced insights to help you make smarter decisions ahead. We just witnessed significant pressure across the board. For the week of June 2nd through 6th, the S&P 500 dropped about 2.6% while the Nasdaq took a harder hit, down around 4.75%. Friday's action was particularly heavy, driven by a hot jobs report that triggered major repricing of Fed expectations. Markets are now pricing in no rate cuts this year and even flirting with the possibility of a hike, with Fed funds futures around 3.86%. That macro shift, combined with positioning unwinds, hit hard. Our proprietary time and timing system continues to highlight July, along with November and December, as the highest conviction turning points. This sell-off lands us squarely in that 1 to 2 month direct hit window, so caution remains essential. While some analysts see room for continued upside into July, these periods often bring volatility and surprises, exactly what we saw this week. Dispersion and correlation have been waving red flags for a while, and this week proved the point. Extreme overcrowding in semiconductors showed up with sky-high implied volatility, over 80% on many top SMH names, and call skew that screamed overheating. Broadcom's earnings amplified everything. The stock plunged roughly 20% over 2 days after a strong beat but softer than hoped AI guidance, erasing massive market value and dragging the sector. This wasn't a total surprise given the crowded trades and low implied correlation alongside record dispersion. Volume showed slight distribution building, and we saw no real flight to safety. Yields on the 2-year and 10-year rose, the curve inverted a bit, and the dollar pushed toward 100.5. Global factors added fuel, ECB potentially hiking, BOJ pressures from a weak yen, oil shocks feeding inflation, and even South Korea's won depreciation at levels not seen since the late 90s, tied to heavy foreign flows into US chips that could reverse. On the positive side, SPY is still holding above key support levels for now, and the move looks more like a positioning unwind plus macro repricing rather than the start of a major bear phase. VIX closed around 21.5 after spiking as high as 28.7 intraday, elevated but not panic levels. We could see a Monday bounce depending on Asian and European opens, with next week's CPI report as a key catalyst. For broader perspective, Tom Lee from Fundstrat remains constructive longer term. In recent comments, he continues to highlight the potential for some of the biggest stock market gains in our lifetimes after 2026, powered by generational wealth transfer, AI productivity, and economic strength. He's noted near-term turbulence and possible digestion or correction into the fall, but views pullbacks as buying opportunities within the larger bull cycle. This week's action fits that pattern. From a Grok perspective, the structural AI tailwinds, data centers, agentic systems, and real-world applications are still in early innings despite the volatility in chip names. These dips can create entry points for quality names with strong fundamentals, but risk management is critical right now. Near-term items for investors: watch CPI closely this week for confirmation of inflation pressures. Monitor foreign flows and energy prices. Any sustained shifts could prolong volatility. In this timing window, focus on position sizing, hedges if you're long, and scaling into strong names on weakness while respecting support levels. Breadth remains a concern. Look for signs of broadening participation beyond the mega-cap AI trade. Bottom line, this sell-off delivered a healthy reminder after extreme concentration. Respect the volatility warnings, dispersion signals, and our July timing window, but keep the bigger picture bullish drivers in view. Stay disciplined, manage risk, and use any bounces or dips thoughtfully. This is for educational purposes only, not financial advice. Always do your own research and consider your situation. Markets move fast. If this update helps, like, subscribe, and comment below. What are you watching for next week, or how are you viewing this pullback? Hit the bell for future videos. Thanks for watching. Stay sharp out there, and I'll see you in the next one. Take care.